Good morning, you're watching Market Cafe with me, Shreyansi Singh, and over the next 1 hour, I'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar, and tell you what the brokerages are saying as well. But first things first, let's take a look at what the international handover has been looking like. Now, it'll of course be a truncated week for the US markets, but let's just see what the action has been like in the week gone by. So the S&P 500 fell 0.5% thereabout, and when you look at the Dow Jones as well, that slid about 0.4%, settled around that 38,000 mark. Nasdaq Composite as well lost about 0.8%, finished around that 15,700 mark. And all three major indexes broke their 5-week winning streaks to end the week in the negative. Now the S&P 500 ended the week in the red, lower by 0.4% thereabout. When you look at Dow as well, that slipped about 0.1%, and Nasdaq also tumbled 1.3%. The producer price index for January, a measure of wholesale inflation, increased 0.3%, and economists polled by Dow Jones had anticipated a gain of 0.1% coming in for the PPI. So that was a move that we saw after that particular data set. The 10-year Treasury yield, when you see also, that spiked above 4.3%. Following the data, at one point, the 2-year Treasury yield also topped 4.7%, which was the highest since December. But it was a roller coaster week for stocks in the week gone by, with investors carefully passing through the direction of the US economy, as well as what cues are coming in from the Federal Reserve. And on Tuesday, the Dow did post its biggest daily decline in nearly a year, and this was after January's headline CPI reading that came in at 3.1%, higher than that 2.9% that was being penciled in. So that's about the US markets, but let's take a look at crude then. Crude oil futures on Friday posted a weekly gain, and this is as simmering tensions in the Middle East overshadowed stubborn inflation in the US and a murky demand outlook for the year. So when you look at the WTI contract, that gained 1.4%, settled around that $79 a barrel mark. Brent futures as well added 61 cents a barrel and settled around that $83 a barrel mark. Now, US crude gained about 3% for the week, settled at its highest price since November 6th. The global benchmark rose 1.5% for the week, settling at the highest level since January 26th. Tensions are rising on the border between Israel and Lebanon, once again raising fears that the war in Gaza could spread elsewhere in the Middle East. And the oil market last week, when you look at the move in the week gone by, largely shrugged off stubborn inflation in the US, as well as a murky demand picture coming in for the year. So that's largely the action when you look at crude as well. But let's also take a look at the key events that you should be keeping on your radar. On Feb 22nd, you did have the S&P Global Manufacturing PMI data, as well as the minutes of MPC meet that you do have on the calendar. So do keep an eye on that data. And there's also initial jobless claims, manufacturing and services, as well as composite PMI data coming in, and crude oil inventories, of course. So keep an eye on that data set as well. And it'll be the last day to buy for special dividend eligibility for Hero Moto on Feb 21st. So keep an eye on that counter as well. In the primary market front, you of course have on Feb 20th Vibhor Steel Tubes that will be listing. And Feb 21st, you also have Juniper Hotels IPO that is opening. Now, in terms of lock-in period ending, on Feb 19th, you do have Medi Assist Healthcare that has a lock-in period that opens. And in terms of lock-in period that opens on Feb 21st, you of course have a host of counters like TVS Supply Chain, Zaggle Prepaid, and on Feb 23rd, you do have Ireda in that particular list. So a lot of counters to keep an eye on winning.
Absolutely, a lot of counters to keep an eye out on, exciting events that will be happening this week as well. But let's move on and talk about some global updates that have come in. Now, in terms of the Japanese tech giant, we have Sony that actually slashed its sales forecast for the flagship PlayStation 5 console for the fiscal year. The company now expects sales of 21 million units in the year ending March versus previous forecast of 25 million units. The Sony stock slumped post-announcement, wiping out a whopping $10 billion in value. Remember, the street continues to flag off their lukewarm gaming business margins as a bigger issue.
An athletic footwear and apparel giant Nike is cutting 2% workforce, which is more than 1,500 jobs. The move comes amid companies' efforts to lower costs as sneaker demand comes under high pressure. Now, higher rental and interest rates have led customers to cut back spending on high-priced goods, resulting in sportswear companies like Nike and Adidas opening new tab, warning that retailers are lowering their orders through wholesale channels.
And reacting to reports of Russian opposition leader Alexei Navalny's death, US President Joe Biden has outrightly blamed Russian President Vladimir Putin and warned there could be consequences. Biden also said that he was not surprised by the outrage by the opposition leader's passing.
And N. Jayakumar, MD Prime Securities, says that Q3 earnings have been better than what was expected and FPI flows have been at historic lows. He also believes that a shift in FPI stance to positive is going to aid the markets. Listen in to what else he had to say.
So many people fall in love with a market. Bubbles need to get created, as it were. Today, the bubble would have been created had it been everybody buying at the same time, sort of thing. The FPIs have been the contra, as I call them, to the local investors. And local investors have moved their savings allocation from about 2.5% 6 years ago to about 4.5 to 4.75% today into the markets. And this is the kind of tsunami we are seeing with SIPs coming in at about 18,000 crores or 18,500 crores per month. Given that kind of an orientation, the contra, which is the FPI selling, has continued right through. It's possible that when overseas allocations change and interest rates, the sort of the cool down in interest rates happen and greater allocation happens, it's possible then that you could have a sort of a confluence of factors coming in, maybe post elections, FPIs coming in, locals continue to buy, and there could be this kind of bubble formation where the markets could go up 10-15% in a very short period of time before valuations really become excessive in every sense of the word. Today, please understand that there are still headwinds that the Indian market is seeing. One of the headwinds, which recently has been earnings, for the first time this quarter has become some kind of tailwinds where every sector has performed and delivered way better than the expectations of the analysts. So earnings have been significantly better. Now that the earnings season is over, they've been significantly better. They will act as tailwinds. So discounting 25, 26 is possible. The investment cycle is being set into place again. Therefore, there's capex additions, there's earnings that will come through higher capacities kicking in.
On that note, let's just slip into a very short break. Don't go anywhere because we'll be back with update on how the Asian markets have opened this morning. Welcome back, and you're watching Market Cafe on ET. Now, let's look at what the Asian markets are doing this morning. Seems like a bit of a mixed opening that has come in. When you're looking at the Nikkei, that's down 0.4%. But Kospi opened up in the green, and that's a bit of a differentiating factor there. It's up almost 1% as well. Let's look at what ASX 200 is doing as well. That's the Australian index. That too was trading with gains of almost 0.1% in trade. Moving on to China, which has finally resumed again today after the lunar holiday that they had. A lot of data points that you are keeping an eye out on also from China in terms of the consumer spending that has seemed to have jumped higher than pre-COVID levels. So yes, key factor to watch out for today is going to be China as well. So Hang Seng as of now a bit under pressure, down almost 1% as well. Let's look at what Shanghai is doing as well. That's on the other end up 0.4% in trade. So clearly a bit of a mixed opening is what we're seeing coming in for the Asian markets. As of now, the Nifty implied open is indicating a bit of a positive start. 60 points up 0.27% in trade. Let's keep an eye out on that because that's going to be interesting to watch out for. But Asian markets clearly giving a bit of a mixed indication, Shreyansi.
Absolutely.
Welcome back, and you're watching Market Cafe on ET. Now let's get more domestic and in updates and Paytm saga, which has continued. There seems like there's some temporary relief for Paytm and its customers as RBI has extended the timeline for deposits until the March 15th. Anurag Joshi is joining in with us to give us more details on that. Anurag?
The Reserve Bank of India has extended the effective date for starting the restrictions on payments platform Paytm to March 15 from February 29. It had announced at the end of January. At the end of January, the central bank had imposed sudden curbs on Paytm and said that credit and deposit transactions on the Paytm platform will not be allowed after February 29. Now, the central bank has said that withdrawal and use of balances will be allowed without restrictions for available amounts of balances that customers have in the Paytm account. And the settlement of pipeline transaction, which has been initiated on or before Feb 29, needs to be completed by March 15. The central bank has also said that nodal accounts maintained by Paytm Payments Bank need to be terminated by February 29, and there is no change in that effective date. The sudden curbs on Paytm had raised concerns about inconveniences to customers of Paytms who are in millions and across the country, and also raised worries about the wider systemic risks because of the sudden shutdown of Paytm. So this move from the central bank could give some relief, or though a temporary one, to the customers of the platform.
All right, thanks Anurag for those details. Now with all this back and forth going on with the payments bank, users might be concerned about what happens to their accounts and money. So Ankur Mishra is here to explain all you need to know and answer your FAQs. Ankur, good morning. Take it away.
The important day to note about Paytm is 15th of March, whereby Reserve Bank of India has clearly mentioned that the deadline on restrictions has been increased to 15th of March from February 29. Apart from that, from 2022 onwards, there has been restriction on Paytm Payments Bank for onboarding of new customers. Now, the important question which has been often asked by many stakeholders is what happens to FASTag? Now, here, Reserve Bank of India has clearly said that you cannot recharge balance to FASTag account after 15th of March. In fact, you need to procure a new FASTag issued by another bank after 15th of March. So that needs to be noted, and also there cannot be any transfer to other bank from FASTag where Paytm Payments Bank is linked. Apart from that, one more question which often comes is what happens to the wallet which has been issued by Paytm Payments Bank. Here, one of the pertinent question is, can I continue to use money from wallet after 15th of March? Yes, you can continue to use that money because there is no restriction on usage of money wherever there is money on wallet. The restrictions are only on deposit as well as credit transactions. There is one more question, that can I top up or transfer money into this wallet after 15th of March? Here, clearly Reserve Bank of India has clarified, no, it cannot happen. There is also one question that if at all there is any refund which is pending, which may come after 15th of March, what happens there? Here, there is one relaxation which has been given by the regulator. If there is any refund which is coming after 15th of March, that can come in Paytm Payments Bank account as well. So that important clarification has been given by the regulator. But Paytm has also said that as far as the UPI services are concerned, it's Paytm Soundbox, card machine, e-nudge, autopay, all those machines, all those services will continue by Paytm, and there is no restriction on that. In fact, the company will continue to focus on the growth which it has mentioned before, and also partnering with various banks so that the services remains uninterrupted.
Thanks so much for that, Ankur. But let's move on and look at what brokerages have to say on this note as well. Now, we have Bernstein that has come out with its view when you are saying the maintaining an outperform rating, while Citi is maintaining a sell rating on the Paytm stock. Let's look at what Bernstein is saying. Now, they're saying that they will, given a target price of 600 rupees, they believe RBI's actions appear to be limited for and to the Paytm Payments Bank. No intention to disrupt other functions of Paytm and linking of merchant operations. So yes, to the non-Paytm Payment Bank overall, this is not a concern that is coming in. That is what they are highlighting in terms of linking of the operations to that. Other than that, what they're saying is that the extension gives longer windows to execute the changes. There's no action for transfer of wallets or FASTags or negative. So yes, that's something that one should watch out for. Citi, on the other hand, has downgraded the stock to a sell with a target price of 550 rupees per share. They believe that Paytm is likely to announce a new bank partnership. Payment UPI is the value VPAs may actually shift to other banks. That's one thing one should watch out for, the shift that may come to other banks. The new partnership actually would be in terms of significant positives that we could see coming in, because there's at least some security on that front. And this may see some elevated users and merchant churns in the near term. There could be a shift on that front. Obviously, they will be revisiting and looking at it in terms of the growth that could actually coming in terms of the lending side, as well as the device rollouts. What is the strategy on that front? Currently, value Paytm is at around 30, valuations of Paytm is at 30 times FY25 EV to adjusted EBITDA. They have a healthy net cash flow as well as of now when you're looking at it. And there's one concern that comes in is that in terms of the likely decline that one could see in terms of the cash burn, that does not, quite support well. That's one factor that they're watching out for and risking it out in terms of the risk that they see as well. Other than that, competition, monetization of profitability, these are the key concerns that Citi has highlighted, and that's why the downgrade, Shreyansi.
Absolutely. So there's still a lot of uncertainty coming in when we look at Paytm. But moving away from that then, LIC has confirmed that it has received an income tax refund of a little over 21,740 crores. Now, the company was expecting a refund to the tune of 25,464 crores. Anurag Shah is here with all of those details. Anurag?
India's biggest insurer, LIC, has informed exchanges that LIC has received a refund from Income Tax Department of around 21,740 crore from Income Tax Department. So this refund is related to assessment year 2012-13, 2013-14, 2014-15, 2016-17, 2017-18, 2018-19 and 2019-20. This refund is related to the bonus share as per LIC. LIC has also informed exchanges that they were expecting a refund of 25,464 crore related to the income tax from Income Tax Department related to the bonus share of 7 assessment year, but they have received amount of 21,740 crore rupees, and LIC is pursuing with Income Tax Department regarding remaining amount. Last month only, in around 16th of January, LIC has informed that they are expecting a refund of around 25,000 crore. On the other side, there were few demand notices also, for which LIC has appealed, and they have deposited around 512 crore related to the appeal amount, which is 20% of overall tax demand LIC has received. But today LIC has informed that they have received refund of around 21,740 crore.
Thank you so much for that, Anurag. But let's move on. And even amid the hopes of a second leg of a re-rating for the PSU back, it's important to get both the sides of the story, right? Are we only going to be seeing a run-up? So bull versus bear, that's what the viewers, we're going to tell you about that in terms of the picture over there as well for the PSU sector. And overall, this is Jefferies versus Kotak in terms of a bull versus bear. Let's go across to Somant, who's here to give us the perspective on what's weighing more for the PSU backs.
Well, like you see, there are two sides to every coin. There are two sides to this PSU rally as well. And both these notes have come in from renowned domestic and foreign brokerages. The first one is from the foreign brokerages, and that is on the bull side of the PSUs. And they are saying that the PSU re-rating has more legs to come going forward. Now, the outperformance that we have seen in PSUs over the last 12 months has come after an underperformance, after a very long underperformance prior to 2020. Now, they are also saying that the recent outperformance is largely on the back of the improvement that we have seen when it comes to return on equity, and also because of large EPS upgrades that we have seen. Now, previously, the return on equity of the PSU companies had fallen from 14 to 15% level to around 4 to 6% level, and this was primarily due to a drag coming in from the PSU banks. However, that has changed, and now again the PSU return on equities have moved back to 12 13% level, and profitability has also improved, which has led to many EPS upgrades for largely all the PSUs that are in focus. Now, they're saying that the index continues to trade at a discount of nearly 40% to the Indian benchmark index, that is Nifty 50, which offers a 15% average re-rating that could still happen if you want the discounting level to be at the normal averages that we had seen earlier. They're also saying that the change of the stance from the government side towards value maximization of PSUs is also one of the reasons which has led to this re-rating and could also lead to this re-rating even going forward. Now, they also have top 3 picks from the PSU space, and that is SBI, Coal India and NTPC, and these are all Jefferies' top PSU picks. The second side is from the Kotak note, and they are saying that they find it hard to subscribe to the market's new narrative of the PSUs. Now, they are saying that as per themselves, market is overly focused on the near-term profitability of these PSU companies and are clearly ignoring the long-term risks that are there, and which is on profitability side. Secondly, they are also seeing some business model changes, and also there is this disruption risk that is always prevalent in the market, and especially for PSUs going forward. Now, for capital goods specifically, they are saying that capital goods PSU may not enjoy the high profitability till perpetuity. They are saying that electric utility PSUs are at a risk of weakening return on equity profile going forward. And when it comes to the oil marketing companies, they are specifically saying that there is a very their marketing margin and their profitability is highly volatile, and this could also fall going forward because of elections and because of increasing crude oil prices. So these are all the bear factors that Kotak has pointed out when it comes to PSUs.
Thanks, Amit, for that update coming in. We're all caught up on the bull versus bear case for PSUs. But moving away from that then, leading business services provider Quess Corp has announced the demerger of its diversified business into 3 independent entities: Quess Corp Limited, Digitide Solutions Limited and Blue Spring Enterprises Limited. Now, this is in a bid to unlock value for its investors. Ashesha is joining in with all of those key details. Ashesha, help us put the demerger into perspective.
Yes, big corporate announcement that came in over the weekend for Quess Corp, where the company said that it will now be split into 3 separate entities: Quess Corp, Digitide Solutions Private Limited and Brewspring Enterprises Private Limited. Remember, there will be no economic change as far as its ownership is concerned, and every shareholder of Quess Corp will get 1 share each of these 3 separate entities which will come into existence. Let's also understand what each of these 3 businesses will house. So Quess Corp will now have workforce management business, which includes general staffing, IT staffing and overseas staffing. Digitide Solutions will include global tech solutions, and Blue Spring Enterprises will be operating asset management. So that will be the 3rd entity that will come into existence. Analysts believe that this will be a big unlocking trigger for the company, and that this merger is expected, this demerger is will be positive for the stock. Demerger will also streamline and simplify business divisions, facilitate deeper focus on segmental growth and de-risk inter-businesses dependency as far as the business is concerned. Nuvama in fact came out with a note where they say that they see limited downside potential on the stock, and that this will be a strong re-rating trigger for the stock. They've gone ahead and raised their target price to 630 from their earlier target price of 580, and they say that the option to own pure staffing is an attractive one, and that Quess's staffing business alone could get valued at the current market cap. So yes, positive trigger that has come in demerger into 3 separate entities. Very big trigger. The stock will be in focus on the back of this news flow.
Okay, Ashesha, that's about Quess Corp. Thank you so much for that update. But Balrampur Chini is also in focus. Seems like they're going to be making a new foray into a new business line as well to manufacture some polylactic acid. You know, what does this mean for the company by this entry? What are the benefits that Balrampur Chini would get as well?
Well, yes, important update that has come in from Balrampur Chini, where the company said that they are now foraying into a new line of business and that they will be manufacturing polylactic acid. This is in turn used for manufacturing bioplastic. Remember, PLA or polylactic acid is a sustainable substitute for conventional plastic and has various applications, and hence it's an important foray for the company. Raw material is the main, sugar is the main raw material that is required for manufacturing this, and hence this is how the company is looking to strategize on this particular foray. They also said that they will be constructing a new state-of-the-art PLA factory with the capacity at global scale of about 75,000 tons per annum, and this project is expected to be completed within the next 30 months. As far as funding is concerned, the company said that this is a 2,000 crore investment, 800 crores will be funded via internal accruals, and the balance 1,200 crores will be funded via additional debt. They've also gone ahead and appointed Mr. Stefan Barot as the president of Chemicals Division. Remember, he has 13 years of experience of plastic industry, and hence that's how the company is looking to leverage on his expertise. So important update that has come in where the company is foraying into a new business with an investment of about 2,000 crores.
Absolutely, Ashesha. That's definitely an important investment coming in when you look at this particular counter. But on the other side, we'll tell you which stocks you should keep on your radar. That's all the time that we had on this segment. See you on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's go across to Ansh to take a look at how the futures and options roundup is shaping up right now. Ansh?
Right, but let's start with Nifty first. So Nifty is just 0.4% away from record high level. But if you see the chart in last 2 months, Nifty has been consolidating most of its time between 21,500 and 21,800 range, which has been acting as a magnet, pulling back any deviation from it. And this is the fourth attempt to break away from this range. Now, in past instances, we saw max deviation of 1.5% from this range, which comes to around 22,130 level. So if we close decisively beyond this, we may see a good positivity into the market for coming few sessions. Until then, the trend appears a bit cautious for now. But let's talk about futures and options. And in options, we are seeing good call buying happening at 22,100 level, indicating traders expecting Nifty to cross over this level and to reach around the record high levels only. Whereas on downside, we are seeing good put writing happening at 22,000 psychological mark, which indicates a good support forming around this level. Let's also talk about Nifty Bank. So if we'll see the chart, Nifty Bank seems to be hovering just below that 50 DMA, which is acting as a resistance, and in chart it has also formed a cup and handle chart pattern, which is a bullish sign. So if we give a breakout from this 50 DMA, which is around 46,800 level, we may see good positivity coming into the market. So if we talk about futures and options, here we are seeing call writing happening at 47,000 mark. Remember, the breakout level is 46,800. If we cross above that, we may see some resistance on 47,000 level only. Whereas on downside, we are seeing good put writing happening at 46,000 psychological level, indicating good support around this level. Let's see what FIs did in previous session. In index future, we are seeing them adding around 10,500 contracts on upside, but they also added 4,100 contracts. But net to net, we are seeing a net addition of around 6,400 contracts, due to which the total FII long position have inched higher from 36.5% to 38.2%, and the total long is at 6 sessions high. So here we are seeing FII getting a bit of positive here.
Thank you so much for that update on the FII flows, as well as what we should be expecting in terms of the FNO update that have come in on that front as well. But let's move on and actually talk about what CLSA has come out with certain notes on different sectors and parts that they're talking about. So first is in terms of the flows that have come in from foreign flows. They're confident that the FPI flows will be doubling, and India's weightage in the MSCI is rising as well. So obviously those flows, they expect that to increase. Now overall, India's MSCI weight is at 18% as of Feb, and JP Morgan's bond inclusion is also to fetch around 20 to 25 billion from the FPI debt side as well. Let's move on and take the view what is coming in on the defense sector as well. And they believe that the DAC has approved that purchase of around $10 billion of equipment. So HAL, that's something that they're keeping an eye out on, doesn't benefit despite them having that $3 billion in the aircraft award. Tata Airbus, that is likely to be a beneficiary of the aircraft award as well. Other than that, BEL, a key supplier, is also off the radars for C295. So that is something they are positive on. So BEL is also something that they're keeping an eye out on. Let's move on, talk about CLS's view on power demand and power. They see power demand going, they saw it go up by around 6% on a year-on-year basis in the month of Jan. Overall demand surge is something that is supports the case for non-fossil energy. Merchant power prices fell 6% in China as well, and structural turn is to aid the inexpensive and high dividend stocks as well. Let's also just look at some of these other stocks. That is, they prefer NTPC, NHPC, and CESC in the power sector.
Absolutely, and as promised, let's also go back to Ansh for the stocks that you should keep on your radar. Ansh?
All right, so starting with Laurus Lab, company set to acquire additional 7.2% stake in Immunoadaptive Cell Therapy Private Limited for 80 crore, due to which their total new shareholding would be around 33.8%. Apart from this, Titagarh Rail will be in focus as company has received an order from Ministry of Defence for procurement of 250 specialized wagons. The execution would start 12 months after signing the contract, which is scheduled to be completed in 36 months thereafter. Tata Power will also be in focus as they have received a letter of intent from REC Power Development to acquire Jalpura Khurja Power Transmission Limited at an estimated cost of around 838 crore. The award is placed for a period of 35 years. Also, let's talk about few earnings, and here we have Schaeffler India. They have reported revenue at 1,875 crore, which is up by 4.5%. But the total expense has gone up by over 7%, due to which the total profit has reduced by over 9%. Lastly, let's also talk about CRISIL, and here we are seeing revenue going up by 11.6% and total profit jumping by over 33%. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters. But moving away from that then, Bloom Energy, the largest client of MTAR Tech, has reported weak earnings. How is it going to impact MTAR? Gaurav is bringing in all of those details. Gaurav?
So yeah, so let's first talk about the e-commerce platform and some of the trends that we have seen in the Citibank that Citibank has highlighted. So first, let's talk about the Zomato, where they have the highest target price of 227 rupees and the buy rating. So where they have seen that in Zomato, if we talk about the Android traffic, it has gone down almost by 4% on a month-on-month basis, but it was up almost by 14% on a YY basis in this month of January. In the Zomato platform also, if we talk about Blinkit, the traffic has grown and the momentum has remained strong for Zomato, and it is actually ahead of the quick commerce and online grocery peers that we have seen for the other peers. Let's also talk about other platforms. For example, if we talk about Nykaa versus Tira, now Tira's traffic has grown relatively if we compare it with the Nykaa's traffic, and it has edged up actually gradually as compared to the Nykaa. Let's also talk about Ajio and Myntra. So some of the clothing platforms, for example, Ajio and Myntra, they have seen some kind of growth tapering off, while Meesho and Nykaa has actually continued to remain in a growth momentum. And lastly, if we also talk about 99 acres, we have seen some kind of moderation in growth in the month of January for this platform. Apart from that, let's also look at MCX, what UBS has to say about MCX. So UBS believes that the journey has not ended for MCX yet. Actually, it is going to start from here, because we will see some kind of strong growth momentum coming up, and this will also impact the profitability for the company in the coming quarters. The new product launches that MCX has will also aid this kind of profitability, and on back of this, if we look at the valuations, which is at 40 times price to equity, that is going to be a little justified for the company, and on back of this, they have actually hiked the target price to 4,300 rupees per share from the previous target price of 3,000 rupees, while maintaining buy rating. So all in all, a bullish view is coming up on MCX as well and e-commerce platforms. So let's keep an eye on all these both the platforms in the time coming ahead.
All right. Thanks, Gaurav, for that update coming in. This is what the brokerages had to say about MCX as well as some of the e-commerce platforms. But with that, we're out of time on this edition of Market Cafe. From me, Shreyanshi Singh, as well as the entire team that put the show together. Thank you so much for watching. The market takes the action forward.